Morning, Steve Frady in Chicago. Well, it's a little warmer today in Chicago, and the forecast is actually we're going to warm up for the weekend, but including in that warm, it might be some rain showers, so we'll see if how this kind of all unfolds. As far as overnight prices, beans are down about 8 to 9 cents. Corn and wheat's a couple cents lower. We continue to see liquidation of the diesel open interest as we get closer to first notice day and get closer to the holidays, and as people kind of liquidate some of their positions going into December 1st. In the cash markets and beans, the market's been focusing a lot on the domestic meal basis, and it's starting to inch a little bit lower. It's not that we're seeing a lot more movement by rail, but now there's a steep discount from a truck standpoint, and so maybe we're figuring out how to get past this logistic issue in the meal, and that could offer resistance to both meal and beans. We also noted a couple articles yesterday about China and that they're losing money on their soybean crush margins. They continue to be a big holder of open sales out of the United States, and I think they'll take those, but maybe they'll kind of ratchet back a little bit on their 2015 purchases, which could offer some resistance to the market, especially if we have good weather here in the United States and South America for 2015. So bears are still holding out that the bean market's going to go lower. Over in the corn, kind of a mixed bag there. I mean, the farmer hasn't sold a lot of corn. Bases are creeping up a little bit in the interior, but we're looking for a weekly ethanol production today to be the same as last week and maybe stocks up a little bit. When we look around the world, as far as the normal buyers like South Korea, Ukraine, and South America might be cheaper than U.S. corn prices. And this rally in the dollar maybe have made those countries' exports more competitive. Well, we also noted in China that they're still not buying U.S. corn or DDGs, but they are bringing in more non-U.S. feed grains into China. So it's kind of interesting how they've kind of isolated U.S. origin, but are bringing in more from other origins. Over in the wheat, we did hear a couple of wheat cargoes, probably feed grain quality coming into the United States on the East Coast. That's getting a little bit of press, but we also are kind of working with the wheat market that's liquidating out of its open interest and kind of not feeling as worried about maybe the Ukraine-Russian situation and that people are going to come in and buy U.S. wheat because of some of the quality issues around the world. All in all, we're just seeing a lower choppy trade as we get into the end of the month, and as we see a little bit weaker U.S. domestic soybean meal basis. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.